will be our first recession that we've held mobile home parks for. So we've done some research for how the industry's done historically, and from what we've seen, the collections actually go up during recessions because people are, hunkered down. They don't want to get evicted because they really have no other option at this point. So they just really want to prioritize their rent. I will say over the last few months, as I think we've been going into this recession, we've seen that.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Brett Bowman is the CIO and co-founder of Suncrest Capital, which has acquired over 1,100 mobile home lots across 20 communities in less than 2 years. Brett, welcome to the show.
Thanks, Sam. Great to be here.
Hey, man, the pleasure's mine. Brett, there are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start, where are you now, and how did you get there?
Yeah, so I started with single-family rentals. Now I'm doing mobile home parks at a syndication level. So we've got, like you said, we're actually just a little over 1,200 units now. We just had a big closing last week.
Congrats.
And to get there, honestly, the one thing I can attribute it to is partnerships. So I started off partnering as a limited partner, grew into junior GP, where I kind of started learning how to really take on deals, work with investors, underwriting, forecasting, all that kind of stuff, obviously the operations. And then currently have a partner, Ryan Hill, that I do everything with at this point. So,
man, that is awesome. What do you feel like have been the I know one of the things we talked about here earlier, or before we even started recording, was systems and relentless grit. It's one thing to have grit, but it's another thing, if you don't have systems that go with it. How did you develop the systems that have helped you guys take down this many units so fast? Yeah,
good question. So this has been a lot of work over time. The main system we employ is actually from Gino Wickman's Traction book, Entrepreneurial Operating System, or EOS. Mm-hmm. And there's a few aspects of it, but the critical one for us anyway is every Monday we have a 90-minute weekly pulse where we go through really anything, like all the high level issues. And it's a standing agenda. I can go into more detail if you want, but it's a standing agenda that every week we just rinse and repeat. There's not really a whole lot of stuff that has to go into the agenda. But you spend a lot of time talking about your key issues. And for us, some of those issues have to do with either collections or some major project that we need to make sure we get right. And then you talk about what do you need to do over the next 1 to 2 weeks to fix this issue. So you kind of drill down the tasks into very bite-sized chunks. The other aspect about it is setting annual and quarterly goals. And so we're really relentless about how we structure those goals, measuring the goals, tracking every single week how we're doing on the progress, all those kinds of things. So there's a few things we've done from an operations perspective. On the deals perspective, or on the acquisitions perspective, we've kind of tried to do the same thing, but we use Trello as a tool that we use for tracking a lot of different things. We do projects there, we do our mobile homes there, we do deals. And we essentially start every deal in the vetting column. And if it passes muster, then it'll go to the next column and then the next column. And so we have a few phases we go through just to underwrite the deal. Mm-hmm. And once we've underwritten it, we decide, okay, we're going to make an offer. Then we move it to the next where we're like kind of negotiating it. And then a few of them get into that column. For the most part, I'd say 1 out of 20 deals maybe gets to an offer stage for us because we're eliminating quite a few. And honestly, we have a team of really strong VAs that help us do most of the first part of the process, which I think is unique for us. Most people are doing that themselves. And I actually am an underwriter by background, so that's something I enjoy doing. But we have a team of VAs that can take so many more deals than I can at once. And then we do the final stage of underwriting after that.
How do you, I guess, developing even... that systems inside of systems, but developing the system for a team of VAs to underwrite those deals and not unintentionally, but pass up on things that might have some merit to them.
Yeah, for sure.
What's that system been like where you can train somebody else to say, put this in the round bin, or no, let's advance it to the next stage?
Yeah, good question. So, and I probably shouldn't call them VAs per se, because they're typical. Our VAs generally we're paying $5 or $6 an hour. This team we pay $20 to $25 an hour. So they're definitely higher skill set. but
I mean,
they're virtual
that's a
technically.
salary for, I mean, it's $50,000 a year for,
Yeah,
so yeah, either way.
absolutely.
Yeah.
I mean, it's nice because we have that flexibility. We can use them as needed, but not always. But we have triggers. So we have different rules of thumb that we've given them that if we put it in a column and to move it, they have to get kind of a buy-in from one of us. So one of our employees is actually has a finance background as well. So he kind of manages them, and he'll give the yes or no to move it as a pass or move it forward. But they'll generally come to us and we'll recommend it. So they'll say, hey, we've reviewed this. We think we should advance it for these reasons, or we think we should pass for these reasons. And almost always we agree with whatever their recommendation is. The only time we've pushed against it is if it's a market we know well and we think that we can get better on the assumptions, things like that, that we might push against a recommendation.
Yeah, because I mean they're just the word assumptions there was, I think, the key. There are, I mean, underwriting is a lot of assumptions.
For sure.
And getting into that where you're like, oh, okay, we can do this in this market, and training someone else to understand kind of that. It's subjective in its own right. I think knowledge is a challenge. So what is that, building that process? What's that been like? Taking it out of your head and getting it into a remote team's head.
Yeah. So when we first started working with them, it's been probably 18 months now. Their background is more in multifamily, so they hadn't really done mobile home parks before. So I developed my model first, and they were using my model. And then one of my partners, Matt, used my model and kind of advanced it to the next level. So they're now using that model. And it's, to my knowledge, the only mobile home park model these guys have ever used is our models. And so we know exactly, when you're using your own model, you know exactly where to go to play with the numbers, because it's easy to know where your assumptions lie, right? So training them on, the big unique aspect of mobile home parks is infill. So if you're buying 100 mobile home park space, but there's only 80 that are filled in, you've got a big assumption of how fast can I fill those other 20. And so we always look to make sure that they're infilling at the pace we think is realistic. Because if I say I can fill all of those in 6 months, that's very different than saying it's going to take 6 years to fill 20 spaces. Right. That can change your IRR assumptions dramatically. So we got to make sure that's right. We also have kind of given the rules of thumbs up for like where we want them to start on CapEx numbers, where we want to start with operating reserves. And then we also tell them where we need our splits to be for investors, the investor IRR. Those kinds of things we've all got documented, so they kind of know what we're looking for. And that's part of the reason why they're able to recommend whether to pass or fail, because we've given them those metrics.
Let's talk a little bit. I love that. Thank you for taking the time to share with us kind of how that process has evolved, because I'm sure it has been a process, and I'm sure it's something where you guys are constantly tweaking it, going back and saying, hey, we could improve this along the way, but it's getting it started. I think is the key there. So good for you for getting that figured out, getting the deals to your VA so they can even underwrite it. Get the mobile home park space is very competitive. A lot of money has come into it, as you well know. I'm not in the mobile home park space, so I'm telling somebody that probably knows way more about this than I do. But what's that process been like, building the acquisitions side of, or even just the lead development side of your business?
Yeah, so I would say if I was going to start off with this and didn't have any leads at all, I would start with Crexi. I would go to Crexi and set up alerts for states you're interested in, size you're interested in, asset class, all that kind of stuff. I would also say just get a digest, because I used to do it where every deal would come to me, and now I've decided it's just one email a day, which is nice because I can see all the deals at once real quick. So I still do the Crexi thing, but then over time I've developed relationships with brokers. So I'm on most brokers lists, at least in the markets we're in. At least as far as I know. I guess I wouldn't know if I've got a broker that I'm not on their list, right? So developing relationships with the brokers. And then it took us more time, but over the last several months, we've also developed a cold calling team. So we have a handful of people that just part-time do cold calling for us. And part of that process is we've got to build lists for them to call, make sure the calls are accurate, the lists are accurate, and that's a whole thing in and of itself. And then they call, and then depending on how that deal looks, we'll underwrite that deal. So there's kind of there's the Crexi, the individual brokers, and our cold calling are kind of our three inflows.
How much of your day now is spent actually managing people versus managing the business itself?
I would say for me anyway, most of it's the business. for me. For Ryan, my partner, that's more the kind of operations guy, he's probably the opposite, where he's spending most of his time on people, and like managing people, training people, holding people accountable, checking on a project status, that kind of stuff is more him.
Got it. No, that's great. I love the delineation of duties there. When you build systems, I think that's one of the things that every business owner's end goal obviously should get to the point where it's like, hey, you're managing people who are managing the processes. It sounds like you guys have gotten there, which is really great. But I also just wondered, what that process looked like for you. So it sounds like you are more on the asset management side of things in the day to day. Is that right?
Yeah, and really what I'm working on is more of the I guess, just to do another Gino Wickman book, right? Rocket Fuel is kind of a sister book to the Traction book, and Rocket Fuel is all about finding the right partnership. And essentially, there's two types of partners that they talk about. They talk about a visionary and an integrator. Right. And an integrator is more about like being able to pull the right people together, the right systems, day to day. And the visionary is a little bit more like high level, looking at strategy. So Ryan and I we've taken the test. And we're technically both visionaries.
Okay.
He's acting as the integrator because we need someone in that role, and he's kind of the best suited for it at the moment. So for me, I definitely am more far range, like where do we want to acquire, what markets do we want to expand into, building relationships with high net worth individuals from an investor perspective, things like that. Obviously, like more of do we need to hire more employees? How are we doing recruiting wise? Where do we go? And Ryan's more, okay, we've got these projects need to be executed, need these contractors. He's meeting with contractors, meeting with our property managers, those kinds of things.
Got it, man. That's really, really cool. Tell me about the mobile home park market. We've seen here in the last couple months, especially with interest rates rising, with cost of debt, skyrocketing. We've seen some softening in some asset classes that have been particularly hot. I know mobile home parks are very attractive as well. What's the market like? What's the state of the market in the mobile home park space?
Yeah, it's gotten crazy for sure. In fact, over the last couple of years we've been into it, we've seen it get hotter and hotter. And I've just, people have been doing it 20 years, have just said the same thing. It just keeps getting hotter and hotter. What's been interesting this past year with rates changing, I'll just give you one of our acquisitions as kind of a case study. So we had this, we really like Springfield, Missouri. We had 4 parks there about a year ago that we closed on. So in December of 2021, we had kind of a pocket listing come in from a broker that offered another portfolio of 6 mobile home parks in Springfield, which of course we were very excited about. We ended up getting it under contract in February at $18.5 million. And it was, the rates were in the 3s. We were looking at some really nice leverage. And then by the time that we were getting closer to closing at the end of April, early May, rates have changed so much that everything kind of fell apart on this deal. Fortunately, we had, enough people in this deal that wanted to make it done that we continued to work through it and had various crazy creative things we were trying to do to make this happen, between seller financing, preferred equity, all that kind of stuff. Ultimately, we ended up doing a retrade on it. So we retraded it down to 17.5. And then on the GP side, the general partner side, we took a little bit of a haircut on what we normally would make from a commission standpoint and a back end standpoint, so that we could keep our investors whole on what they were going to make. And so between the retrade and then our concession, we were able to still get the deal done with the same terms we'd expected for our investors. And we finally just closed on that 2 weeks ago. So, and then the other thing I should say is we had the seller increase rents in July while we were under contract to not quite market, but still closer to market, which helped improve the cap rate, which helped improve our going in debt service coverage ratio, which with increasing rates was kind of critical going in, right? To have that going in DSCR be more sustained. So a few things we had to change in the environment to make it happen. I definitely think having the rent increase go live before you buy is a great tip for future people. I think we'll do that. Maybe not every time, but I think we'll consider that every time. And yeah, so I just think going forward, these deals are going to be tighter and tighter with the rates continue to go up, and sellers, I just don't see them getting realistic anytime soon from a cap rate perspective.
Right. No, no, certainly don't expect that anytime soon. When you What was that conversation like with the seller? Getting them to increase rates. I mean, I think it would be kind of interesting to be in that position as the seller, having a new buyer come in and say, "Hey, you go out and Mr. Seller, go out or Mrs. Seller, go out and increase rates." I'd be like, "Well, shoot, why didn't I do this 2 years ago?" I mean,
yeah, it was interesting for sure, and that part wasn't as hard of a negotiation as obviously we're retrading another million. We were taking $1 million off the purchase price. That was the harder conversation.
right.
But the rent increase, we just kind of showed him the numbers and said, look, with this, our cap rate was, I think we were at 6% cap rate, or maybe it was 5.8, something like that cap rate. And increasing the rents took us to about 6.5, which made the debt service coverage ratio above 1.35. And so it was relatively, hey, look, we need you to do this. We have to have this in place for at least 1 to 2 months before we close. That's the only way we're going to get this bank to finance it. And so it was kind of if you want to close, if you want this money, you got to do it kind of conversation. So it was a little bit more straightforward than a lot of negotiations are.
Right. No, I think that's an absolute pro tip. Absolutely. Thanks for sharing that. I have not actually heard of anyone I'm sure it's happened a lot more than I know, but that anyone's successfully pulled that off. They're pre-close getting the seller to raise.
It's nice because not only do you walk into the better cap rate, better coverage, but you also aren't the bad guy because the seller did it. So you come in a few months later or even a month later, and even though you're the one that pushed for that rent increase, you get to start fresh with the residents, and have your own policies come in.
Yeah, absolutely. Speaking of policies and not being the bad guy, I read there's a newsletter that comes out it's called MHC or MHP Weekend. I don't know. I can't remember what the name of the newsletter is, but I read it every weekend because it's always interesting just to hear what's going on in the mobile home park communities. And there's a lot of activity, a lot of buzz about communities pushing back on rent raises, on people going to the city level or the county level, and forcing landlords to not be able to raise rents, things like that. Have you experienced any of that, seen any of that in your portfolio and or around you? Can you speak to that at all?
We haven't seen it yet. So the markets we're in we're mostly in Kansas City, Springfield, and then up in Des Moines. So far, those markets haven't seen that too much. The closest we've come is in Des Moines. There's a larger operator that owns a couple of mobile home parks, and their rents are close to $700 a month, and where we've done 2 increases and we're still around 400. And so we've seen they have taken a lot of heat, a lot of bad press, and we've had some homes move into our communities from that. But from a government, so there's been some word from like the local mobile home community association that there could be some regulation coming in, largely because of some of these players raising rent so much, but nothing yet. Nothing's been official yet.
Got it. Okay, very good. Let's talk about tenants for a second. What's the kind of feel from the tenants right now? I mean, is it something where people are keeping up with their rent payments? What does this demographic do in a potential recession?
Yeah, so this will be our first recession that we've held mobile home parks for. So we've done some research for how the industry's done historically, and from what we've seen, the collections actually go up during recessions because people are hunkered down. They don't want to get evicted because they really have no other option at this point. So they just really want to prioritize their rent. I will say over the last few months, as I think we've been going into this recession, we've seen that. So we've seen our collections have ticked up quite a bit.
Wow.
And so we're in the high 90s for the first time. We generally hover in the low 90s on our collections, and we're 98% collections. So we're starting to see that trend.
That's amazing. That is not the answer I would have expected. Right? But hey man, that's no complaints from the landlord side of things.
No, not at all. And the way that I've heard it explained is, you've got your top tier Class A apartment complexes, and if people living in there start struggling, they're going to go down to Class B or Class C. And so by the time you're down in a mobile home park, it's not necessarily your bottom run, because honestly, I think in some cases people prefer that over apartment complexes because you don't have immediate neighbors. You can park right next to your home. You've got bigger space. You own your home. Those kinds of things, right? But at the same time, it's sort of the last safety net in a lot of in a lot of cases.
Right.
So by the time that you're there, you really want to make sure that you're safe.
What's one management and or ownership tip you might give if somebody doesn't own a mobile home park right now, that's something you're like, hey, this is something we do at our parks to, queuing off of your word safe there, where it's like, what do you guys do to keep this the right tenant, the right property, clean environment where people feel safe when they go home?
Yeah. We have a few things we do. The first is we have a very strict policy against having sex offenders in our parks. I haven't done a whole lot of multifamily myself. The only multifamily I've done has been like as an LP. So I don't know if this is a common problem with multifamily, but in mobile home parks, we frequently will see that the previous landlords have had, very severe sex offenders in their parks. So we just sent out notices for 6 in the 6 communities we bought. We have 6 we're evicting for that are sex offenders. And that's largely because, we all have kids ourselves, and we're just don't believe that we need to be the second chance for some people. And these communities have children running around, so we don't want that. That sends a message to the community. The other big thing that we do, and again, probably doesn't really resonate with apartment complexes, but we make sure we trim trees all around. So tree trimming is often neglected by owners, and we've had trees fall and break homes before in the past. It's a big storm. So fortunately, no one's been injured yet, but we like to prevent that from happening. So trees can be the enemy of a mobile home park if you're not on top of it. So again, we just closed on this park about 10 days ago, this portfolio of 6, and we're already doing tree trimming this week. We're going through and doing.
Right. And I could only imagine that for a lot of your legacy mom and pop owners, tree trimming is expensive.
It is. Yeah.
Across, gosh, you can take down, I'm just thinking of the last couple of trees I've taken down on my own property. I'm like, well, there was $4,000 a tree. Like it add up fast.
It really does. It's crazy. We budgeted, I'd have to check for sure, but we probably have about $80,000 we budgeted for this portfolio for just tree trimming.
Just for tree trimming. Removals. Wow. Yeah. And there's your answer as to why, again, legacy owners probably are going, that's $80,000 I don't need to spend.
Yeah, exactly.
That's fantastic. Let's rewind a little bit. How long have you been investing in real estate altogether, single family homes all the way through to mobile home parks?
About 12, 13 years.
Okay, cool. Let's rewind 12, 13 years. What is one thing you feel like you've done really well that other investors, maybe that aren't as far along as you are, should emulate?
Well, I mentioned the partnership thing. I probably would double down on partnership. So when I was doing single family homes, it was just me. I was like learning obviously from realtors and agents, and I was joining groups, and there were in-person and Facebook groups that I was learning a lot from, read a lot of books, those kinds of things. But as I started getting into more multifamily, that's when I felt partnerships really helped, because the level of complexity is just so much higher when you jump into something like industrial or retail. Even now, I've never done self-storage. I wouldn't want to get started on self-storage by myself. I'd probably want someone that has had a lot of experience that I can partner with and learn it from. So I think partnerships can be really critical. I would also hedge and say, you don't want to just jump in just because somebody's got this experience. You got to make sure you can mesh and you know each other and you can trust each other. So building relationship before becoming partners, almost like dating before getting married, can be important too, because it's pretty hard to sever a partnership, especially once you've bought multiple projects together.
Absolutely. Absolutely. Well said. And if there was one thing that you could go back and maybe do differently, or a mistake you could help our listeners avoid, is there anything that comes to mind?
Yeah. So every time we buy a property, we do what we call a postmortem, where a couple weeks afterward, we all meet together and say, okay, what did we learn from this acquisition? What went well? What didn't go well? And we always find things that are surprises every time. That you're like, okay, I thought we knew everything about this before we bought it. Right. And then a week after you buy it, you're like, okay, didn't know about this, didn't know about that. So we continue to add to our due diligence list, right? I would say the biggest thing, especially in mobile home parks, I think going forward, we will always scope sewer lines. Always. It's an expense. It's at least a couple $1,000s to go out. And, if you end up not buying the mobile home park, you lose the money.
Right.
But at the same time, you could get stuck with a mobile home park that has crushed in clay pipes that you're going to spend $200,000 to replace all of them. So you'd be better off knowing ahead of time, hey, either I need to walk because this is going to cost too much, or I've got to go back to the seller and say, hey, we need a $200,000 price concession because we've got to fix these pipes.
Right. Man, I love it. I absolutely love it. Brett, you've given us all sorts of good things to think about here today, from scoping the sewer lines to, partnering up early out of the gate to, what was your one earlier where you said, it was getting the seller to raise rents there before you even close. So
it's a good one for sure.
Yeah, lots of pro tips today. Brett, thank you for taking the time to come on the show. I've certainly enjoyed it. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Yeah, so our website's probably the easiest. It's just suncrestcap, short for capital.com. My email address is also Brett with two T's, so BRETT at suncrestcap.com. But my email address is listed on the website.
Awesome. Fantastic. We'll make sure we include that there in the show notes as well. Brett, thank you for taking the time to come on the show today. I do appreciate it.
Of course, Sam. Thanks for having me. It's been fun.